What's happening today is not normal. This is not how markets operate. And look what happened on Friday. 2.5% drawdown. Twitter is full of blood. Oh, I lost everything. I'm like, how so? You shouldn't have. Just 2.5% drawdown is nothing, right? And that's the other thing. How many people who are on X or on YouTube have actually seen a grinding bear market? Because most people started trading in 2020 during pandemic. They're sitting home getting government money, putting into a Robinhood account. How many people have seen? And a lot of people on Twitter are like, "I will never have a bear market again." Oh, I guarantee you will have a bear market. And it'll start out of the blue with no warning. And then the CNBC clowns will go, "Ooh, market's down 25. Officially, it's a bear market now." I'm like, okay, cool. But all I'm saying is there will be another one. They don't last that long, luckily. They last about average 18 months, 20 months. But it's brutal. It is brutal, right? And especially if you're in 3, 4, 5 beta stocks, like these nosebleeds that are doing what they're doing now, they're going to get smashed. They're going to go down 80%. But from where? I have no idea. Am I smart enough to tell you, yes, this is the top? I'm like, no, man, I'm not picking the top. Market's making all-time highs. How could you be bearish on anything? Now, that does not mean that I have to capitulate and trade on the long side on these Oklos and CIFRs and NBIXs and Rigettis and ARQQs and quantum computing and all this bullshit. All these companies who don't even have revenue, forget about earnings. All that stuff has gone out of the window a long time ago. Common sense left the building. Analysis left the building. We don't know. All I know is every day they go up 5, 10%. I'm like, okay, but I don't have to participate in it. I'll get my money. I'll get my bags. I'm not worried about it. But I don't have to do it that way because I don't know. Because I've seen the ugly side, the other side of the coin on all of this multiple times. Because when it ends, out of the blue, you'll be like, oh, it'll go up one day. I'm like, no, it will not go up one day. But then again, if I'm not going to participate on the upside, there is 10,000 different stocks. I don't have to be in this groupie stocks. I don't have to be. There's many things, many strategies. And that's what I tried to do in the chat group, in our members group. Bro, there's many ways to skin a cat. You don't have to, other than buying puts, because a lot of people are perma bears. Like, no, that you don't do. But the issue with all of this is not the way the markets operate. People are just used to 2% correction, buy, will go higher. It doesn't work like that. And, stocks don't go up 10, 20 points every day. It doesn't work like that. But then they're all getting priced for something. What are they getting priced for? Beyond perfection at the moment, right? I mean, you can do some fundamental analysis. Technically, they're just ripping momentum. But fundamentally, at some point, fundamentals will be important. When? I don't know. But, corporations who are, the mother's milk of a corporation is earnings, profits. Now, most of these nosebleeds, I call them nosebleeds or parabolics, okay, forget earnings. So we can measure something like how much profit, what is the growth, like NVIDIA has profits, Apple has profits, Google has profits, okay? When you value a company at a $30 billion valuation, you're going to say, well, about going great, and the profits must be great. I'm like, okay, hold on a second. What profits? They don't even have revenue. First has to have the top line, then the bottom line. There's not even revenue on these companies. They're getting priced for perfection to Mars and back with the hope of the future. But that's how the markets work, though, right? Stocks go up first, the price moves up, and then earnings will catch up. Well, that's not happening. They just keep going higher, but they don't even have revenue to have earnings. They don't even have, they're burning cash. They don't even have revenue. What are we pricing these for? How are we pricing these things? And is this price valid? Because I believe that the stock market is the best pricing mechanism on the planet. What you see the price is your reality. You can argue with it all you want. You can create all the biases on the planet, all of it. Oh, its PE is too high, and their Kager is this, and the Case-Shiller index is this, and then the Warren Buffett indicator is that. Nobody gives a rat's ass, man. That's the price. At that second, somebody's doing a transaction. That's the price. You don't like it? You don't have to deal with it. Turn it off. Do something else. Find another stock that you like. There's 10,000 of them out there. It doesn't have to be this crazy parabolic shit that you need to deal with. If it's irritating you and you think they're expensive, I don't know. Don't create problems for yourself. Don't say, oh, this is way too expensive. I agree, they're expensive. I think they're priced for perfection plus, 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 plus. But time will tell. Market will always take care of that. Market will always take care of that because it's the best pricing mechanism out there. Okay? So, but then you take shots because that's called trading, right? Not investing. That's called trading. You take shots. You're wrong, you get out. You're right, you take your profit and get out. But I am just saying that you don't argue. Right? A lot of folks on Twitter are like, "Ooh, the quantum computing stocks." I'm like, "Yeah, they're ridiculous. That's super. Like, why is IONQ worth $30 billion? They don't even have revenue. We don't even know if this thing is real or not." So all I'm saying is, but momentum is so strong that you can't get in front of it, and it's the greater fool theory, right? I'll just buy it today. It's just like the dot-com era. I'm not truly comparable, but we're getting there. Because I was trading on the desk in the dot-com bubble. We'd be like, what the hell is going on? And it was like the greater fool's theory. I'll buy it today. Tomorrow, somebody will pay a higher price for it. That's all we're doing. Because there's no fundamentals. There's no earnings. There's no revenue. There's nothing. Hope and pray. Hopefully, it'll be higher tomorrow. And sure enough, for like years before it crashed, it was just like that. You buy today, sell tomorrow, you make 10%. In what world? Well, we're kind of very similar to what was going on in the dot-com bubble. And I'm not talking about major names. I'm talking about these companies that were trading at $2 a share. Now they're at 80 in less than a year and things like that. I'm like, it doesn't work like that. But then I was, I'm also not going to create this bias and say, oh, this is the top. I'm like, how do you know it's the top? I don't know. I mean, there are some indicators, volume. You can watch all kinds of things. You can draw some chopsticks on these things. No. Momentum is so strong that you don't want to get in front of that because that's a train wreck you can't get out of. Especially if you make it personal. None of this is personal. Market doesn't give a shit who you are, what you know, how much money you have. Market doesn't care about any of this stuff. Just market's there to make you and me wrong, both at the same time. And you just kind of play the probabilities. And if you do have experience, you've seen the movie before. Like, I know all this is going to end badly. Am I going to be going like, oh, then tomorrow I'm buying all the index puts or whatever? No, hell no. I'm not going to get in front of the train. Maybe, like I did with Rigetti, lost like 6-8 points. I'm going to cover today. Maybe the train has left the station. Okay, so there's two ways of looking at this. This is a good analogy. You want to get in front of the train that's coming at you and try to push it back? Yeah, good luck. Or maybe you're at the station, the train is leaving, you're running, and then grab the handle and then maybe get on it. I mean, that's about it. Because it's coming at you. Even if it's going real slow, okay, you're going to get crushed. And that's what people do. They go stubborn. Oh, it was expensive at 30. Now it's 40. Oh, now it's 50. You have no money. You're broke. I rather keep my bullets dry, take smaller risks, and take the L. You got to take the L, man. And take the L. We got to learn how to take L's. I think a great trader knows how to take an L better than any other person. And a great trader. A good trader knows how to take L's when they get stubborn, they get like emotionally involved. I'm like, look, we don't like being wrong, but when you're wrong, you got to admit you're wrong. Okay. And you just got to take the L and put it up here and go, hey, I was wrong.